It's been an exciting year for you. Most recently, you've unveiled a $100 trillion crypto strategy at the White House. You've been promoting it in the crypto industry. Maybe we can start off with telling us a bit about what's behind this and why America needs to subscribe to this.
You know, I've been watching the industry for the past 4 years or so. And I think there's been a lot of confusion, a lot of controversy, a lot of conflict, and confrontation that was all unnecessary. And it was unnecessary because of a sort of a lack of vision and a lack of creativity amongst the policy makers and the participants. So, for example, in a world where the only assets that exist are securities and commodities, and in a world where it's impossible for any innovator to issue a security, then everything has to be a commodity. And that means a token is a commodity, a currency is a commodity, a tokenized security is a commodity, and a commodity is a commodity. So what we had was people very confused, thinking, well, is Bitcoin a currency competing with the dollar? Or is Bitcoin something different, a store of value competing with gold? And then is Bitcoin competing with Trump coin or any other token or not? And what's the next Bitcoin? And so I think the crypto industry was at odds. A lot of people that want to be issuers of tokens are forced to go through this kabuki dance of pretending they're decentralized when they don't really want to be decentralized. What they want to do is access the capital markets, and they haven't had a way to do it, and we haven't had that discussion. So in my framework that I've laid out, and this is after hundreds of meetings and talking to people in the Senate, in the House, in the SEC, in the CFTC, in the White House, every industry participant, all the Bitcoin investors, all the crypto investors, all the crypto exchanges, all the policymakers. After lots of conversations and after listening to every word uttered by Gensler, by all the regulators, after listening to every minute of congressional testimony, here's my opinion. My opinion is the industry will move forward in a cheerful, constructive way with the greatest good done for the greatest number of people on earth if we define 4 new asset classes. And they would be a digital token, a digital security, a digital currency, and a digital commodity. And those 4 new asset classes would rest atop 3 20th century assets: securities, commodities, and currencies. I don't think we really want to change the definition of 20th century assets. There's just too much inertia. You can't change 100 years of securities case law. And you don't want to change the way the world trades commodities like silver and soybeans and trying to deal with changing the definition of currencies issued by nation state. That's too jarring. So the right way to handle this is simply to say, we want to allow digital tokens to be issued by 400 million businesses, ideally in 4 hours for $40, right? And what's the use case of a digital token? It's for capital creation and for innovation. So let Trump coin be issued, let Katy Perry token or Joe Rogan coin or any token, whether it's a smart contract token or a utility token or a meme coin, or maybe it gives me access to, to a music library on a website, or maybe it gets to be a hyper complicated, token or NFT, some digital utility or some right that just stops short of being a security. And there's 400 million people that want to do it, and they want to do it in 4 hours for $40. And the reason that they can't issue a security to raise capital is because securities take $40 million, an army of lawyers and accountants in 4 years, and then you got to pay $10 million a year to stay compliant. And so, and even after you do all that, securities would only trade 9:30 to 4 on a few markets. They don't trade globally, worldwide, 24/7. So tokens solve the problem of giving capital markets access to hundreds of millions of corporations. And that's a profoundly important thing. If you have no money and you want to start a business, or you're a podcaster and you somehow want to raise capital from your customers or from investors to change your business, or if you want to innovate and say, I'm going to have a podcast that has 2 layers of access, the free version and the tokenized version. If you buy the token, you get the inside scoop and you get the comment. And if you take the free version, you don't. So if you want innovation and you want capital creation, you need that. But you need a legitimate path to do that. And so that's missing. You know, the debate for the past 4 years was, well, if you want to be an issuer, then you have to register with the SEC. And then, of course, it's illegal to trade. Okay, that doesn't work. Or you can't be an issuer. So if you pretend that you issued the token, but then you pretend that you're not the issuer, you don't control it, and it's decentralized, I won't sue you. Well, that doesn't work either, because the truth is 400 million entrepreneurs want to issue the token, raise money overnight, and use the money to do something good. So we don't have a digital token asset class in the United States. There isn't one recognized in the world. We need one. As soon as we have one, you'll see an explosion of innovation there.
How do you balance that innovation with consumer protection? Because we did see this explosion of, in the ICO boom, initial coin offerings, where innovators were able to create their own token, raise money for their projects, but a lot of them, most of them ended up being scams and people ended up losing money. So that's where we see the regulators coming in and taking their hammer, perhaps a little heavy-handed.
What I'd point out there is we should just have a very principled framework, and the observation would be, if you want to issue it, you have to actually register that you're a person, right? You can't have like an anonymous secret organization issue it, because there's no one to sue. So an issuer should actually register the token. They should lay out the utility. There should be a standard data structure. It could be hosted by crypto exchanges or by the industry. And then when you issue the token, you say, this is what the token, this is who's issuing it, this is how many there are, these are the rules, this is the utility. And then the issuer ought to be civilly and criminally liable for fraud. Basically, do not lie, cheat, and steal, and you're responsible for the damage you do. That's just a biblical piece of guidance. And I think that you just let the free market determine that, because what will happen is if someone does defraud someone or steal, they're going to get sued, right? If you issue a token that results in the death of a person, you're going to have a criminal manslaughter charge against you, right? So there ought to be civil and criminal law, and there ought to be consequences for the issuer. But I don't think, and here's the point, I don't think you ought to have to take 4 years and ask permission from a governmental agency before you issue the token. If you think about the metaphor, you don't have to wait 4 years in order to post a tweet. You don't have to wait 4 years in order to create a product. You don't have to wait 4 years to take a trip or drive a car. Like if I told you you had to wait 4 years and spend $40 million and then spend $10 million a year on an insurance policy before you can drive a car because a government regulator wants to make sure that you don't hit some kid crossing the street, nothing would move. The truth of the matter is, if you hit a child crossing the street, you are criminally liable. And if you slam into someone's bakery, you're civilly liable. So there are consequences to driving a car, but it seems utterly silly for the government to say that everyone has to apply for permission to say something or do something, whatever that might be, out of an abundance of caution to protect the consumer. So I think that you should just have consumer protection laws, just like every other product that is created in a free market.
So do you envision a new regulatory agency overlooking this new set of digital asset classes?
No. If you were to tweet something that's a lie right now, we don't have an agency, right? You could be sued for libel or slander. If you drive your car into me crossing the street, we don't have a new agency. And if you start a bakery and if you bake muffins that have poison in them, right? We don't have a new agency, right? You don't need to create a new agency for consumer protection. We've already got courts. We've already got criminal statutes. You're not allowed to kill people. You're not allowed to steal from people, right? So you don't need a new agency. We've already got the law. So my view on digital tokens is we ought to just let issuers issue the token and hold them liable for the damage they do. In egregious examples, there'll be criminal liability. Someone will go to jail.
So it's the issuer that would have the liability because they're doing, I guess, the KYC of the people who want to release these tokens?
The issuer would have liability, but not for KYC. I think that with these digital assets, all the digital assets ought to circulate freely, friction-free, at the speed of light, at the speed of a computer. So a digital token, a digital currency, a digital commodity, and a digital security all should circulate. No KYC, no AML, friction-free. That's how you're going to make the economy work. But the issuer should have liability for fraud. So if the issuer says, I'm selling 10 million, CoinDesk tokens, and then you actually dump 1 billion CoinDesk tokens, it's fraud. You could call it wire fraud. You can call it consumer fraud, right? It's kind of very straightforward. I don't think we need more. And again, if CoinDesk issues a token that pays off on the murder of me, right? Well, that's criminal act, right? So maybe you're breaking a criminal law and you ought to be liable as the issuer. But I don't think you need any other agency, right? And that's the point of a digital token. We should see 10 million tokens issued. And by the way, you're right, most of them will fail. Just like 10 million people tweet every morning and most of the tweets don't go anywhere. And 10 million new mobile apps get created or millions of Chrome extensions and millions of iPhone apps. Most of them fail. Most businesses fail. That's okay. Like 99% can fail, 1% will be revolutionary and they will change the world. And I think the whole point of the capital market is people ought to be free to innovate, right? And the problem in a socialist environment where the government decides is that no one has any freedom to do anything, right? At some point when the government tells you can't create a business, you can't speak, you can't drive a car, you can't move, you can't create a product, right? You end up with sort of a collapse. So let me move on from that though, because I don't think we want to spend the entire interview talking about just digital tokens. I think that if you go to digital currency, the real point is an issuer, a corporation, whether it's Circle or Tether or a bank, ought to be able to issue a digital asset that's backed by currency. So if I want to sell $1 billion of digital stable coin, I ought to have $1 billion worth of currency in a bank. It ought to be 1-for-1 backed, right? And that's not the same as a stable coin. Like it's not UST backed by Luna, right? It's not, that would be a token, by the way, right? If you create a token which you purport to be stable at $1, okay, you're kind of a fool to trust it. But if I create a digital currency, then I issue $10 billion and I buy $10 billion of treasuries, and it ought to be sort of a regulated entity. And the issuer ought to be liable to the government and ought to be liable to the buyer for fraud, right? And that's kind of very straightforward. But then the digital currency ought to circulate friction-free at the speed of light. And the benefit of that is that the stablecoin industry will go from 50 billion in the US to 10 trillion. And we will export $10 trillion worth of US dollars to the rest of the world. And probably everybody in Africa and everybody in Asia will start using the dollars. Maybe the Europeans will flip to the dollar, right? It would be great for the world's reserve currency. And so, and it would be great for the 8 billion people on the planet that have to use a defective currency as a medium of exchange or a short-term store of value.
So if the digital economy relies on stablecoins, why do we need Bitcoin? Where does I know you're the master of the Bitcoin reserve strategy. So tell me where that enters the picture.
Yeah, because if you think about money, money decomposes into currency and capital. So if you live in Argentina and by law you're required to pay your tax bill in pesos, you're going to need ARS. You're going to need local currency. And if the currency is losing 20, 30, 40% of its value a year, then you would hold that for 4 weeks. Then if you needed money for the next 4 weeks to 4 years, call that midterm money, you'd probably want to buy the dollar. So you would have in your checking account USD. You wouldn't hold Bolivar, you wouldn't hold Naira, you wouldn't hold any of the really weak collapsing currencies. You wouldn't hold any Syrian or Afghan or Iraqi currency. So in that case, you always want to hold the US dollar. But if you need to hold the money from 4 years to 400 years, there is no institution or wealthy individual that would ever claim that the majority of their assets are held in dollars or pesos. They're holding capital assets. And those capital assets are split between 3 things. They're either holding bonds. You might be holding corporate bonds. You might be holding treasury bonds. Or they're holding real estate. You're probably owning a building or property or a home or some other tangible physical asset. Or you're holding private equity. I own a company. Or public equity. I have a portfolio of Magnificent Seven stocks or S&P index or something. So think about all the wealthiest people in the world. Elon Musk, Jeff Bezos, Mark Zuckerberg. What percentage of their wealth is US dollars? It's not even 1%, right? So Bitcoin doesn't compete with the dollar. Bitcoin competes with capital assets in the world, right? And there are $450 trillion of those capital assets. So think you own a Nigerian warehouse. You own 1,000 acres in Siberia. You own a private portfolio of Chinese stocks, right? You own a bar of gold, right? Why do you own these things? Because you had to put your money somewhere. So Bitcoin is replacing or competing with those things. If you look at the M2 money supply, I think the US dollar was showing as like 13, maybe 17% of that. And the primary competitors of the dollar are CNY, Euro, and JPY, Yen, Euro, and Chinese currency. So as the stable coin, as the digital currency backed by the dollar starts to circulate, that number is going to go from 17% to 30%, right? And what we're doing is we're really competing with other world currencies. And then the Bitcoin asset is less than 1%. And as it grows, if Bitcoin goes to $13 million a coin, then Bitcoin will go from 0.5% or 20, 30 basis points of the world's capital assets to 13% of the world's capital assets. It will still compete with real estate, equity, and bonds, but it will emerge as like a monetary index for long-term money. And so that's why it's important to understand this idea of digital commodity, because the use case of a digital commodity is not capital creation. That's why all the altcoiners, that's why they don't get, if you have zero money, you can't buy Bitcoin. So if you have zero money, but you're a podcaster, you need to issue a token to raise money. So capital creation is a use case of a token. The use case of a digital commodity is capital preservation and appreciation. If you already have money and you want to store your money for 100 years without worrying about risk, then you want to put it in a savings account. And so traditionally, the king commodity as a long-term money was gold. And what happens is gold demonetizes silver, and silver demonetizes copper, and copper demonetizes glass beads, and they all demonetize the giant stone coin of the Yap people or bales of tobacco. And so Gresham's law says the strongest money wins. In the end, there can be just one. We're all going to go to the strongest form of money. So the strongest form of long-term money, which I'll call capital, is Bitcoin right now. And all these other assets are going to be traded in for Bitcoin. And there's no point creating a second or a third Bitcoin because there's only one network that's going to win. The rest are just going to collapse against it. But the real point here is you want a commodity to be a store of value, and it needs to be an asset without an issuer. And so if you look at all these asset classes, what you have is digital tokens, an asset with an issuer with very light regulatory touch. You can issue it overnight. A digital currency is an asset with an issuer, but it's just pegged to a nation state currency. A digital security is an asset with an issuer, but it's really tokenized stocks or bonds. So it's like BlackRock releasing tokenized Apple shares or BlackRock releasing tokenized S&P index. It would be a token that circulates on a crypto exchange at the speed of light 24/7 globally, but does have an issuer. And Bitcoin is special because it's an asset without an issuer. And why would you want an asset without an issuer? Because you're a company that doesn't want to trust any other company, or you're a country that doesn't want to trust any other country, or you're a saver that wants to store your money for 200 years, and you don't expect any company to last 200 years, and you don't expect any government to last 200 years. You just want your family to be rich forever. And so Bitcoin appeals to the people that want immortal capital. And you can see if you lay out this taxonomy, there's 4 quadrants. You need them all. You need short-term money in order to make payments. You need tokens to create capital. You need to tokenize securities, because otherwise, how do you innovate or create more efficiency in the world capital markets? And then you need a commodity to store and protect your capital. And once you see all 4 of them, you realize they should all be designated as new asset classes. The rule ought to be the issuers have an obligation to not lie, cheat, and steal. They're responsible for the damage they do. The exchanges should have the ability to trade these things at the speed of light with anybody or anything, any machine. And then they should have obligations. Don't lie, cheat, and steal. Don't assume a conflict of interest. And then the holders ought to have a right to self-custody. You ought to be able to own your assets, custody your assets, and transfer your assets freely. So I think that what we all agree with is there ought to be no AML, KYC frictions on asset transfer, because that destroys the utility of all these digital assets. And to the extent that you want to enforce consumer protections or investor protections, you should put the obligations on the issuers. And that way the economy starts to grow very, very rapidly.